Hey guys, in today's video, I'm going to teach you a strategy, but more importantly, I'm going to talk to you about the underlying reasons behind that strategy. And many of you guys are probably asking, more importantly, how can anything be more important than the strategy? And well, hopefully by the end of this video, you understand. And this was a revelation that I had during my trading career. I guess to kind of back things up a little bit to introduce myself for you guys that are new, my name is Akil Stokes. I'm a Forex trader. I'm a trading coach. I'm also one of the co-founders over at tier1trading.com. And although I've been a consistently profitable trader since 2010, there was a 3-year, 2.5-year period before that where I struggled really badly. And one of the reasons that I struggled, there were many reasons, but one of the main reasons that I struggled is because I was looking for the shortcut. I was always searching for the strategy, the secret sauce, the holy grail. And it wasn't until I took the time to really understand price movement that I was able to become a much better trader, really get control of not only my technical analysis, but the psychological side of things as well, because I had more trust and really a belief in what I was doing. So we'll start off this video by showing you a strategy. It's a simple one called the 2618. And then I'll talk to you a little bit about really understanding why that move occurs and how that knowledge can be pretty helpful. If we go down to the hourly, here's what we'll see. We're going to see essentially a double bottom down here. Price action came down. Boing, bounced up. Boing, retested. Boing, bounced up. Broke and closed above the highs here. And now we're retracing, setting up. Dun, 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 dun. Gabby wrote it in already. A potential 2618 opportunity. Now, is anyone unfamiliar with 2618s? Perfect, we all are. Okay, so what you can do if you're looking for a 2618 is you can take your Fibonacci retracement from the low right here to the high right here, which is I heard it mentioned before. It's basically it's a double bottom with a pullback, or double bottom or double top with a pullback, obviously depending on which way it forms. So you can look at it. At the end of the day, it falls into that category. As I tried in the Foundation 2 to classify everything under kind of like 3 ways of trading. It's a pullback trade, just a specific version of trading a pullback trade. So a lot of traders will use it for one of 2 reasons. Either reason 1 or reason A, it gives them more confirmation for a double bottom. So let's say you have a double bottom at in a random location, right? We always talk about how, I do like double tops and double bottoms. I think they're very valuable. I only think they're valuable if they're at specific points on a price chart. So the where is always more important than the what. So let's say you have a double bottom at a random location. There's no structure, there's no fib confluence, anything like that. And you're saying to yourself, man, that's a nice double bottom, but there's nothing else there to build my case for entry. So what you can do is you can take a more conservative approach and say, hey, well, instead of just waiting for a double bottom, I want a little bit more confirmation. So I want confirmation in the form of price breaking kind of the peak point of this double bottom, right? That higher high, higher close is going to be a sign of what? A continuation higher, right? So that's one way, a more conservative way of entering a double top or double bottom. Another way would be if you just miss it, right? We talked in yesterday's Q&A about sleeping and working and missing trades. Let's say you're waiting on this juicy, sexy double bottom for whatever period of time. And of course, as always, it happens right when you're sleeping. Well, maybe the move isn't over. Maybe this gives you a secondary opportunity to get involved. So that's what the 2618 is. But the general principle of it is it's a pullback trade. Just kind of a specific way of doing it. So what you would look for in 2618 is you would look for a zone. Your zone is going to start, your kill zone, I guess you can say, is going to start at your 618 retracement. And it's going to go to the low of your pattern right here. And If you're curious about the name 2618, Jason Stapleton, who cleverly invented the name, basically said 2 for a double top or double bottom and a 618 retracement. We are geniuses, aren't we? So this would be your zone. If you're an aggressive trader, you're putting a limit order right here at the 618 and you're just buying it up. As soon as it touches, boop, boop and buy, boop, buy it up. If you're more of a conservative trader, obviously you're waiting for your specific reason for entry once price action hits that zone. So if price action hits the 618, then I look for RSI, double top, double bottom, higher high, higher close, pin bar, whatever would be your personal reason for entry. Does that make sense, guys? Perfect. So potential 2618 trade here. So if you are a channel trader, keep an eye on this. Could be an opportunity to get involved, and obviously depending on how aggressive or conservative you are, it's going to dictate where your targets are at. Your most conservative targets are going to be at a retest of the previous structure highs right here. And if you want to take it higher, let's see if there's any Fibonacci influence at this area as well. Shaboom, swing low to swing high. I'm smelling a 1618 up there. Yep, 1618 Fibonacci retracement all the way at the highs. We could do this as well. This would be 1-to-1. We don't know where this is going to retrace to, so a little bit early to do that. But you can also add a 1-to-1 measured move as well to that. But if you're looking to trade, try to trade this across a channel. This is your opportunity to do so. So I hope that made sense for you guys. It's pretty simple, as I said, nothing fancy to it. But now I want to take a step back and kind of erase what you knew about the strategy and just focus on pure price action, pure movement, and see if this gives you a better understanding of why that strategy works. So that's going to be one of the issues with range bars, double tops, and double bottoms. Going to be very difficult to trade. But you could get a clearer view of what price action is doing, and you still have kind of the same rotation happening here. So you have stuff like this. Market goes down, boom. You have that very shallow extension, and then boom, you still have this violation. So the same principles, and this is why I tried to harp on that so much in the Foundation 2 course, was that I think people get too caught up over the setup, I guess, if that's the right way. People get too caught up over the setup, whether it's a double bottom or this or that they forget about the underlying view. I hope that's the right way of saying it. I don't know if that makes sense, but does that make sense what I'm saying, guys? Like, before this even becomes a 2618, or before you even look at it and say, oh, it's not a double bottom, so blah, blah, blah. Here's what's important. If we were to just look at this without looking at any type of pattern or name or technique or strategy, and you see this, right? You see this happen. You see this happen, right? What is this right here? What did we just do at this point? We put in a new structure low, correct? And then what did we do directly after that new structure low? We violated our previous outside return, correct? Give me a yes. Say it. Right? So when we violate that previous outside return, that puts us into what? Yeah, now you're participating. That puts us into what? That puts us into a bullish rotation, right? We know that bullish rotation. Is it a sign that the market is going to reverse? No. It's not a sign that the market is going to reverse, but it's the first kind of clue that, hey, we should be on the lookout for a potential end of the previous trend, a potential start of a new trend, or maybe consolidation, something like that. So the underlying idea that we have in the market is that, boom, this bearish move has ended. We may be on the lookout for something bullish. And then again, right, if this is going to start, this is going to be our first retracement, right? Again, we don't know anything until hindsight, right? But this is going to be our first retracement. this is going to be our next extension, correct? So this would be an aggressive way at trying to getting involved in a new move higher. So that's our viewpoint. That's our analysis of the market. Now, did we mention anything about any type of setup or pattern or strategy? Was there anything in there about that? No, this is just reading a price chart, right? Reading a price chart. No, nothing. I hope you guys understand that. No, nothing. This is just reading a price chart. This is why it's so important. Now, when we go back and we look at, we kind of visualize what we had on the the hourly chart. We had the same type of setup. We didn't have the violation of structure. We had a hold because we had that long wick to the downside. And then we had the same thing, right? We had a double bottom. We know what that tells us. We had a violation of the highs of that double bottom, or the peak of this double bottom, which gives us that confirmation. And now we're coming back to retest, and we have that 2618 opportunity. But what's important to understand is I guess not what the 2618 is, right? And I don't want, I think a lot of traders get in trouble because they don't really, and I did this. This was a mistake I made because I was kind of quick to just hop on a strategy and trade, whatever like that. But I think people get in trouble because they look at this and they're like, okay, 2618, I know this setup, I should look to buy. But do you know why? Why should you look to buy? What does it actually mean? So when you understand how this over here fits into general analysis, it brings it more, I don't know if I want to say it brings you more confidence. It gives you more information. And I don't know if you guys can help me out. What's the word I'm looking for to explain this? I guess if I had to say it, it's like this. It's like the difference between knowing the answer to a math question and knowing the formula for how you got to the answer. Right? You can memorize the answer, right? If I told you this divided by this times that, you can memorize the answer. But if you forget the formula, or I guess if you don't know the formula, then you don't really have an understanding of how to get to that answer, and you're going to be limited. This is very similar to that. It had to be a long time ago. Remember that post I shared during, what was our last workshop? The last free workshop we did, the 4-day event. Anybody remember? Was it it had to be Ascension, right? Back in April? Was it? Remember that math question I shared with you? I'm trying to find it on social media right now. With the chickens and whatnot. I've got too many posts. I don't know if I'm going to find this, guys. But it was that question about the chicken and whatnot. And everyone got the answer wrong because they forgot how to do the equation. Yeah, I don't think this is going to happen. Yeah, the egg and the banana, that thing. And that was a good example of how you can't just memorize something. Here it goes right here, right? You got the 3 chickens, you got the chickens plus the eggs, you got the eggs plus the banana, and what's the following question? And like 99.9% of people got this wrong because they forgot the formula for how you do math and in which order you do math. So it's kind of a perfect example of how understanding the underlying reasoning is a more important skill than just kind of, I don't want to call it a shortcut, but I guess the shortcut of just kind of like knowing the answer. Because in one situation, you're very limited. In another situation, you have the ability to really, honestly, if you know the formula, you can answer any question that is given to you. It's as simple as plugging it into the formula. And that's why I say, if you can understand, excuse me, if you can understand how to read a price chart, that's like knowing the formula. If you could understand the basics of price action and how the market moves and why the market moves, you have unlimited potential because you can figure out the answer to any question because you're working off of that basic formula. On the other hand, if you just know a set strategy, that's all you know, you're never going to be able to evolve. You're never going to be able to improve. When market conditions change, you're stuck right? Because, oh, this used to work like this, but now it no longer works like that. What do I do? Another example would be someone that follows a signal service, right? Well, you follow a signal service and you get these awesome signals from Trader G. All of a sudden, Trader G decides to stop sending signals because he's made enough money off of you and he wants to enjoy his life without being a slave to his computer all day and says, I'm done. What do? You don't actually know how to trade. You've just made money off of taking signals. Now, all of a sudden, you're stuck on an island by yourself with no usable skill to get off of it. So this is why it's important to understand price no matter what type of trader you're going to be. It's that underlying formula, man. It's gonna allow you to answer any question that the market will give you. So good example of that. So I hope you guys enjoyed that, and hopefully it made sense now on why I value really the underlying values of learning to read a price chart and understanding price over just learning a specific strategy. Oh yeah, as far as that chicken, banana, egg question goes, the answer is 36. Yes, I know. But a few common mistakes that we see. One is maybe you rushed through it. You did not do the proper math, especially at the end with the amount of bananas and the amount of eggs. And two, and this is where it got me, you did your math equation wrong. You forgot the kind of elementary school math that what's inside the parentheses. So multiplication should always be done before addition. So you got to do that multiplying first, then you got to add that chicken on last, and bada boom, bada bing, you're going to get 36. Lastly, if you like these kind of concepts, if you like kind of these underlying values, at least our experiences and my experience of changing your mindset and how you should be thinking if you want to become a consistently profitable trader, I recommend checking out our free Ascension workshop. It's absolutely free. It's a beautiful webinar. I shared it last week and have gotten amazing responses for those who never knew about it and now have a completely different view of what they need to do to stop struggling and what they need to do to start being successful. So I'll put a link below. You can click on it. You can watch it. It's awesome. It's not too long. And until next time, plan your trade, trade your plan. Do me a favor, hit that like button, subscribe, and hit that notification bell if you're new. And of course, leave me a comment. All right, take care. So I hope you guys enjoyed the video, and I know you did because you've made it to the very end. And if you didn't, you probably would have bailed far by now. But if you're interested in more awesome content, make sure you check out these two videos to the right. I highly recommend them, especially if you are a newer trader looking to learn some of the basic concepts about how to read the market and really get an understanding of our approach to trading. Also, if you're a podcaster, make sure you check out the Trading Coach podcast. It's available on your favorite podcasting app, and it comes out 3 times a week, each and every Monday, Wednesday, and Friday. All right, you guys enjoy, and until next time, plan your trade, trade your plan.